It's been estimated that more than 80% of startups and small and mid-sized businesses are either completely unaware that they're eligible for government-sponsored research and development tax credits, or they just don't know an easy way to get them. But the fact is, these credits can save your company thousands of dollars every year. And it's not just for big corporations either. I'll show you why you need to know about this right now, so stay with me. Hi, I'm David Weiner, CEO of Cashflow Strategies. They call me Mr. Cashflow because I work every single day to help small and medium-sized businesses, as well as medical and dental practices, to improve their cash flow and bottom line. Thanks for watching this video. If it's helpful to you, please smash that like button on the video and subscribe to my channel to find out more ways to make your business or your medical and dental practice more profitable. Let me know as well what you think of this video and suggest other topics that would be helpful to you in the comments section below. So let's talk about R&D tax credits. Regardless of a company's size, success happens when minds are focused on change. Some of the world's best innovations came at the 11th hour, when it seemed like a breakthrough was impossible. These breakthroughs can change the world, but in most cases, those aha moments didn't happen over a long weekend. Instead, it took years of endless tweaking and testing, otherwise known as research and development. In addition to the current stimulus programs, the Research and Development Tax Credit has actually been a long-standing government-funded program finally made permanent as part of the Protecting Americans Against Tax Hikes or PATH Act of 2015. This specifically opened up enhanced benefits for startups. From its origination in 1981, the R&D tax credit has helped companies remain competitive in the marketplace by allowing a dollar-for-dollar reduction of federal and state income taxes owed for qualified expenditures incident to the development or improvement of a product or a process or a formula or an invention or software or technology. The definition was made intentionally broad to allow for lots of innovative industries to take advantage of it. The PATH Act created important opportunities for taxpayers claiming the federal research credit. A permanent credit means that all businesses can engage in meaningful long-term planning for tax benefits. The expansion of the research credit to offset payroll tax liabilities means that many small businesses will now share in these benefits. Unknown to most startups, though, is that they're eligible to receive these credits for their annual investments in the innovative work that they perform, regardless of whether their product is in the marketplace or yielding revenue. Basically, this is the government's way of rewarding companies for investing in innovation and continuing to build cool stuff. So do you qualify? The R&D credit isn't just for companies that are heavy researchers. Think innovative activities at a higher level, as the program is quite broad. A good rule of thumb is to ask yourself the following questions. Number one, do I make something? At the most basic level, if you're developing or improving on technology or products, odds are you're probably entitled to some money back from the IRS. Second question, does my product change over time? Businesses rarely make their products the exact same way year after year after year. So if your company invests resources to make its own products, software, or processes cleaner, greener, quicker, cheaper, you most likely qualify for the R&D tax credit. So what expenses can you claim? There are typically 4 buckets of expenses you can pull from to calculate your eligible research and development credit savings. Those are, number 1, W-2 wages for employees who perform, directly supervise, or directly support research and development activities based in the U.S. Number 2, payments to U.S.-based contractors who are performing technical work for the company. This does not include payments to US-based agencies that distribute work overseas. It's no secret talent is global, but the R&D credit is strictly for US expenses. Number 3, supply expenses used for prototyping and development. Think materials consumed pre-production. And then number 4, cloud expenses as it relates to your staging and testing environment. Software companies can rack up fees for AWS, Google Cloud, Heroku, and the like. So how much return on investment can you expect? You have the potential to earn back up to 10% of what you spend developing products and technologies every year. Sometimes, however, this can vary based on the type of research activity and whether you do the work in-house or whether you contract it out. Contractors hold a little less weight in the calculation than that of a wage earner. For startups that aren't yet profitable or are operating on losses, they specifically have the option to use their R&D credits as a payroll tax offset, meaning nearer-term cash relief in the form of a FICA tax reduction. To qualify for this, a company must be 5 years old or less and have less than $5 million in gross receipts for the given claim year. Otherwise, it takes the original route to offset income tax liabilities only. Let's say you do qualify as a startup. If you had $200,000 in W-2 salaries, that would mean that you owe $12,400 in FICA taxes every year. That $20,000 credit that you might have earned can wipe out that liability completely in 2021. And it's not a use it or lose it situation. An unused credit can carry forward for up to 20 years and further add to your long-term tax planning. Take action now to keep your company thriving. The R&D tax credit is a lifesaver, especially for a young business. And the best part, it can be claimed every single year. For companies that have never claimed the credit, there also may be credits available for the prior 3 years. There's also a small amount of urgency here, particularly for the folks opting for the payroll application of the incentive. The program only allows for R&D tax credits as a payroll offset to be elected on an originally filed return. So if you think you can qualify, it's best to get this item tackled and included within your regular or extension tax filing. If you're not sure whether or not you would qualify for R&D tax credits, please give me a call. Let's talk about whether or not your business or practice is a good candidate for R&D tax credits. There's no cost or obligation to look into these credits for you, and it could mean huge tax savings for your business or your practice. Again, if this video has been helpful to you, and I hope it has, please hit the like button on the video and leave me some comments below. Also, for more of these videos, please subscribe to the channel and hit the notification bell as well so that you're notified every time I create a new video or go live with my live stream, Mr. Cashflow Live. Once again, I'm David Weiner, Mr. Cashflow, CEO of Cashflow Strategies. After all, it's your money. Keep more of it.